In this video, we're going to talk about the accounting cycle, and that's what we're going to learn in this chapter. In this chapter, we're actually going to go through the first 4 steps of the accounting cycle. So the accounting cycle is the process where accountants take actual events that take place in the real world and translates those events into accounting language. It is the equivalent of if I go into the store and I buy something and I spend $5 and I leave the store, right? That's a transaction. The company received money, I received an item. If I was a writer, I would say person A went into the store and purchased an item for $5 and left the store. Well, as an accountant, we don't do that. We have to take that transaction, that exact same transaction, and translates it into accounting language. And that's what the accounting cycle is. The accounting cycle is all the steps that we go through to take an actual event that takes place in the real world. A transaction where a company buys something, sells something, engages in some sort of activity, and then we translate that into a series of steps that produces the financial statements. So the whole goal of the accounting cycle is to produce financial statements. Okay? And in order to produce those financial statements, we have to follow these. You'll see financial statements is step number 7. We have to follow these 6 steps here. And then when you finish financial statements, then you have these 2 other steps that basically prepares the accounting system to repeat the process again. All right. So step 1 is to analyze transactions. That's where something takes place in the real world and you have to translate that into an accounting language to record the transaction in a general journal. So this is the act of taking an actual event and recording it in a way that accountants can understand. And that's basically what you're going to spend a lot of this chapter doing. Figuring out how do we take a transaction and turn it into an accounting language, namely a debit to one account and a credit to another account. So that's what we need to learn. The first thing we need to understand is steps 1 and 2. How to go from steps 1 and 2. How to go from a transaction to a debiting account and crediting an account. And you'll learn that in the next series of lectures. Then once you record it to the general journal, then you're going to post it to the general ledger. And step 3 is really a summarizing of step 2, right? You just take step 3 and you summarize step 2. And then 4 is you create an unadjusted trial balance. And again, step 4 is a summary of step 3, and we'll see how those play out. So in this chapter, we're going to focus on steps 1 through 4. And in the remaining chapters, we're going to focus on 5 and 6. That's the next chapter, 5, 6, and 7, and then 8, 9, and 9. All right? So after you prepare an unadjusted trial balance, then you have adjusting entries, then you have an adjusted trial balance, then you create the financial statements. This is the goal. And once financial statements are created and presented to the world, then you have what is called closing entries. These close the books. Whenever you hear people talk about closing the books, or closing the accounting records, this is what step 8 does. And then you prepare a post-closing trial balance, and then you repeat the process again. And so this is the cycle. You keep going through the cycle. This is what accountants do, financial accountants do, on a daily, weekly, monthly, and yearly basis. And in the next couple videos, you're going to learn how to move from step 1 to 2, right? This is really important. How do you analyze a transaction and turn that transaction into a debit to a certain account and a credit to another account? We'll talk about that going forward. And this chapter, we're going to focus on steps 1 through 4 of the accounting cycle. But first, you've got to understand how to analyze a transaction and turn that into a journal entry.